Hello, I am Mr. Jackie and welcome to my workshop channel. In my channel, I will share with you my personal insights, tips, analysis and entry strategies for investing in the international gold market. If my views can help you to get good returns and profit, please help by liking, subscribing and sharing my videos with your friends, and feel free to discuss and contact me in the comments section. Thank you all. Spot gold generally fell last week, reaching a high of 2022.16 and a low of 1951.87, refreshing the lows since April 3rd. It fell by a volatility of $70.29 for the whole week, a cumulative loss of about 2.3%, and closed at $1,976.86 per Oz. The dollar index rose for the second week in a row, gaining more than 0.6% and hitting a new high since March 20th at 103.625. Mainly last week, U.S. President Joe Biden and Republican House Speaker John McCarthy met and stressed their determination to reach an agreement to raise the federal government's $31.4 trillion debt ceiling as soon as possible to avoid a debt default that would have a catastrophic impact on the economy. McCarthy said after the meeting that he expects a bill to raise the debt ceiling to be introduced in the House of Representatives next week, noting that negotiations are now in a better position than they were last week. This has helped to calm fears of a U.S. debt default, leading the market to revise its expectations of where U.S. interest rates may be heading. The dollar was boosted by the continued hawkish comments from a number of Fed officials last week, with the likelihood of a Fed rate hike next month again elevated. Money markets now expect a 41.4% probability that the Fed will raise interest rates by another 25 basis points in June, compared to 15.5% just a week ago. The market has generally lowered its expectations for a Fed rate cut later this year. And last week released a number of economic data show that the U.S. economy showed strength. Last Tuesday, the U.S. released retail sales, April, data results increased to 0.4%, much better than the previous value of -0.7%. Significantly, shall not be less than the market expectation of 0.8%, but also make the market investors cut. The Fed will cut interest rates, expected to bring support to the dollar to take up. Gold prices continue to fall under pressure. To last Friday, the Fed Chairman Powell. He said that in view of the tightening credit conditions, the Fed may not need to raise interest rates frequently. After the Fed Chairman Powell spoke, spot gold prices were able to take a breather to rebound up 1%, recovered some of the lost ground earlier last week. Personal analysis is that, last week the dollar rebound continued to strengthen, gold prices fell, along with the economic data by last week's positive and the Fed's hawkish remarks by a number of key officials. The focus is still dominated by technical trends. Spot gold prices earlier accumulated gains. From February 28 this year, 1804.59 low soared to May 3 recorded a record high of 2077.86. After this rise, the market is now only to make a healthy. This is in line with my analysis of last week's forecast. The market, spot gold, should benefit from 1. International geopolitics. Russia and Ukraine war continues, resulting in high global inflation. Interest rates continue to rise, economic slowdown and into recession. 2. The risk of U.S. debt default brought about by international investors on U.S. debt and U.S. dollar assets. Long-term concerns and loss of confidence. 3. The banking industry failure wave crisis. 4. The global acceleration of the pace of de-dollarization, and other 4 negative fundamental factors. All of these will have a direct impact on the U.S. economy and the U.S. dollar and make a heavy blow to the U.S. economy, which will favorably support the gold market. Therefore, the investment strategy should be to absorb gold at low levels for medium and long-term hedging and to obtain high returns as the policy. The gold price should continue to break up and make new record highs in the future. Important U.S. economic data and events this week. Thursday, May 25th, U.S. GDP quarterly revision, Q1, forecast, 1.1%, previous value, 2.6%. Friday, May 26th, U.S. Core PCE Price Index, April, forecast, 4.6%, previous value, 4.6%. Durable goods orders, April, forecast, -1%, previous value, 3.2%. U.S. University of Michigan Consumer Final Confidence Index, May, forecast, 57.9, previous, 63.5. Asterisk this week, a number of Fed officials will be speaking at various forums. Investors should pay more attention. Strategic recommendations for the week. Resistance, asterisk 1988.64, 2000.01, asterisk 2011.37, asterisk 2029.73, 2048.12, asterisk 2060.09, asterisk 2155.72. Support, asterisk 1978.72, 1968.45, asterisk 1961.78, 1951.87, asterisk 1941.22, asterisk 1908.97. Major ranges for the week. Resistance, 2011.37, support, 1941.22. Daily market resistance, 1988.64, support, 1961.78. The forecast is that the gold price should first test the resistance at 1988.64 at the beginning of the week, and then continue to test the lower support at 1941.22 support after completing a short rally. Note that the strategy has been low absorption to do long as the main. The recent gold price profit taking should be close to completion. It is recommended to wait for this week's gold price retracement close to C** 1941.22, 1908.97 support level, gradually absorption, broken support level, for $60 stop loss. Medium and long-term profit target 2109.35, 2155.72. This is the end of this issue. The above analysis is purely my personal opinion for your reference. I look forward to seeing you all again in the next issue. Thank you all.